Good day, ladies and gentlemen, on this Christmas Day. Welcome to the show. Merry Christmas, everybody. I'm glad you guys are having I hope you guys are having a nice Christmas anyway. Of course, you know, the Omicron thing is putting a bit of a damper on things, especially for Christmas travel. But, you know, I hope you guys are having a nice Christmas. Merry Christmas, everybody. Now, what I'm going to talk about. What I'm going to talk about is this, basically, what can we look forward to the next year? And it can be my next year prediction for 2022. I'll tell you, I'm going to try to sum it up fairly quickly for you guys. We've had tremendous amounts of stimulus over the last couple of years. And now they're cutting back. This is cutting back time. So the first quarter, what I'm expecting is downward movement in everything. And it might even extend into the second quarter of 2022. So the first 6 months of 2022 is a danger point of a downward slide for everything. And it's because they're tightening. Only thing that's supporting these markets is the central banks. And they're removing and withdrawing support. So the Fed put, where is it? Where's the Fed put now? And what can you expect? A downward slide in prices of everything. Because it's all been pumped up by the Fed and their cheap, easy money. But then, this is not going to last forever, guys. Because it's going to continue downwards until it doesn't. And until it makes the Fed stop and the other central banks stop and reverse gears again. So, probably before the middle of the year, look for them to reverse gears. And what I mean by reverse gears is loosening up monetary policy. And in effect, the crisis that they generate and the recession that they're going to generate during the first 6 months of 2022 is going to have to be repaired in the second half of 2022. I'm also expecting the virus to recede in the second half of 2022. And when the Fed and the central banks turn on their monetary policy and go back to a more accommodative monetary policy, which means more cheap, easy money, at the same time as the virus is receding in the second half of 2022, I think we're going to be looking at a little bit of a boom coming. And that's when we're really going to see the precious metals start to go up in price. So basically what we're looking at is first half, a downward slide in the price of everything. And it might even extend into the precious metals. It's certainly going to extend to the markets. And, you know, the bond yields are going to start to creep up. And I think this is what's really going to shut the door on the central banks is the debt market and the bonds. As these yields creep up, the maximum they can allow the U.S. 10-year Treasury to go would be 2.5%. That's the absolute maximum. And in fact, at 2.25% on the U.S. 10-year. So watch those treasuries during the year. This is going to be the big indicator when the Fed turns and changes monetary policy again. When you see the treasuries, when you see the U.S. 10-year Treasury yields start to creep up toward 2.25, I think the turning spot will be around 2.25 to 2.5 on the U.S. 10-year. And this is when the central banks will change policy again. For investors out there, you're looking at your lowest ebb in the stock market probably just before the Fed changes policy. And then we start to go back up again. So we're looking at a downward slide in the first half of the year and an upward tick in the second half. From the lows, it'll be set. It might not even last the first half, this downward slide, before they relent. You got to pay attention. And remember that contrarian investing requires patience, and it also requires you to keep your eyes on the ball. Keep your focus here, because what's to make money, you need to keep your focus, and you need to watch the central bank. Thank you guys for listening. Merry Christmas, everybody, and a Happy New Year. And we'll see you guys very, very soon. This is just a show I wanted to put out there and say Merry Christmas to everybody. Love my fans out there. You guys have a great holiday, and we'll see you guys very, very soon. As soon as things start to open back up again. Bye-bye for now.